Good day, fellow investors. 6 out of 7 factors when defining a bubble tells us Nvidia stock is in a pure bubble. We discussed the SPAC mania, how everyone forgot that bubble, and how AI might be the next bubble. And the Boban asked here, okay, that's with the benefit of hindsight, can you do a video on Nvidia or another AI stock and come to the same conclusion as for the SPAC bubble? We were pretty prescient on analyzing bubbles in the past, the ARK bubble, Beyond Sanity, and that all food. And now the question is Nvidia in the same bubble as there were other bubbles? Some say mania comes and goes, some say the AI bubble imploding will be biblical. So before we start, we need to define what a bubble is and then put that components onto Nvidia analysis. If we go to Ray Dalio, he discussed whether the stock market is in a bubble a few months ago, and he gave us a definition of a bubble. He considered it not in a bubble, just frothy. And here we have the definition of a bubble, and we'll go through this 7 Ray Dalio factors to analyze whether Nvidia is in a bubble. Some examples of past bubbles: the Nikkei index. You can see here we are now exactly where it was almost 40 years ago. It took 40 years to recover from the bubble. Cisco Systems, something that we'll compare a little bit also with Nvidia, still hasn't recovered from the dot-com bubble when it was told that the internet will change the world. The internet did change the world, but companies didn't make as much money as expected. Then we had the housing bubble in 2007, we discussed the most recent SPAC bubble, and now we are at Nvidia, and you can see here the price exploded in the last few years, and we have to see now if that is a bubble. The first factor is high prices to cash flows. If I look at Nvidia, I look at the market capitalization, 3.43 trillion, and I have to compare that to the cash flows. The last 12 months cash flows are 47 billion. If I calculate that compared to the market cap, we are trading at 73 times cash flows. 73 times cash flows. So if you buy an Nvidia stock at current cash flows, it would take 73 years to get your money back. 73 years to get your money back, and the cash flows are mostly used to do buybacks. No matter the price, now Nvidia, as the stock price goes up, does more and more buybacks, as that's what Wall Street does, and then it pushes the price even higher. If at some point in time the cash flows go down just a little bit, then the buybacks are totally worthless. But okay. So I would say high prices to cash flows, we have one. Of course, we can discuss the growth and everything in the future, but that leads us to the second bubble component. We have to check up unsustainable conditions, extrapolating future growth, not considering cycle capacity limits. And then I go to Nvidia's investor presentation, the last one uploaded, and their slide number 6 is already about trillion-dollar opportunities. Trillion-dollar opportunities. Everything will be AI and a new type of data center, AI factories, expanding the data center footprint to 2 trillion and beyond in the coming years. Eventually, companies in every industry will operate AI factories as the digital twin of their workforce, manufacturing plant, and products. A new industrial revolution has begun, and Nvidia will provide all the chips to all the industries out there. You will bring your kid to daycare, AI Nvidia chips will take care of your kid. That is the plan, and Nvidia is selling that plan to perfection to everyone out there. So they are masters at that. I'm going to the 2000 annual report from a company and discover all that's possible on the internet. Same story. Cisco hardware, software, and service offerings are used to create internet solutions so that individuals, companies, and countries and countries have seamless access to information regardless of the differences in time and place. Completely correct. The internet changed the way we do everything. 25 years ago, this was not possible, that you look at some guy on the internet sharing his research and knowledge. This was impossible. Now, that is normal. The only problem is it comes at practically no cost. You can watch 100 videos of me and the cost for you doesn't increase. And that's something that might also happen with AI. Nobody thought it would happen with internet, but all the competition lowers prices, nobody makes money. And everything looked great with Cisco. Net income was booming. Same with Nvidia. Per share was booming. The CEO was discussing over the next 2 decades the internet economy will bring about more dramatic changes in the way we work, we live, we play, we learn than we witnessed during the last 200 years of the Industrial Revolution. And he was completely correct on that changes. Completely correct. The problem is that that did not reflect into earnings and everything. Cisco did continue to grow, but not to justify the exuberance of the high price to cash flows there. It just continued to compound at its compounding levels. So my theory, if AI is so smart, everything will be cheaper, even chips. And it's not just me that's saying. Goldman's top stock analyst is waiting for the AI bubble to burst. So the 16 trillion rally is what we are looking now with AI, even higher as this was a few months ago. But he says costs, limited users means it won't revolutionize the world. Maybe not as fast as it is priced in now. The payoff from all that AI investment so far though has been relatively modest. And just take Amazon, 600 billion revenues this year, and the AI business is a multi-billion-dollar revenue run rate. That's 2 billion, it's a multi-billion. So he continues how we don't yet see the AI benefit. Salesforce that should benefit from it is not seeing the benefit yet, but the hype is still there, and he is specialized in semiconductor equipment companies, and therefore it's not just someone telling you that, someone that has a little bit more experience than everybody else out there. To get the return on the approximately 1 trillion of AI infrastructure, companies would need to be able to use it to solve increasingly complex tasks. So yes, some jobs will be more efficient, coding, etc., but that will also make the jobs more competitive, and sooner or later the stock market will turn. The key here is, one of the most important lessons I've learned over the past 3 decades, he said, is that bubbles can take a long time to burst. So that's something very important when it comes to investing. So unsustainable conditions, it will change things, but if it doesn't lead to profitability immediately or as planned, then it is a bubble. Therefore, I would say that the second condition also bubble. Many naive buyers who were attracted in because the market has gone up a lot. If we check the stock, it has gone up a lot. If we check Europe, this is from July, everyone was trading Nvidia. This is from the hero, a cheap broker. The naive guy is just going for Nvidia, and we see Robinhood. Nvidia is among the most traded top 10 investments, of course. So yes, we have many naive new investors chasing the bubble, broad bullish sentiment, another factor. And if we look at the Wall Street ratings, everyone has it as a very strong buy. So strong buy, 48 analysts, buy 10 analysts, hold only 4, and sell 0, sell 0. There was a guy somewhere here telling people Nvidia is a sell, and he probably got fired and now runs some small YouTube channel here, so we have to find him on YouTube. 64 of the analysts who follow the chip maker are still advising after a 10x clients to buy it even after a 140 jump this year. Only one says to sell, and he is now on YouTube. That's how Wall Street works. When something goes up, it is a buy. When something goes down, it is a sell. And just to show you that when Nvidia was cheaper, some said it was a sell. So we have broad bullish sentiment. I didn't find any purchases financed by debt. I think it's just still normal money flowing it. But we do have forward speculative purchases, investments, inventory, 30 billion for AI investments. Everyone is racking up that infrastructure, etc., etc. United Arab Emirates, MGX investment vehicle, 30 billion of private equity capital. Everyone is throwing money there. So multi-trillions of dollars to finance, says BlackRock Chief Executive Officer Larry Fink. And also, Bayo Ogunlezi's Global Infrastructure Partners was just acquired by BlackRock for 12.5 billion. So there is plenty of forward speculative purchases. Thus, we have 6 out of 7 that this is a bubble. And therefore, if I put Nvidia on our quadrant, the reward will likely be negative. The risk is extremely high at this current moment in time. So I have to put it here at the riskiest of them all. Now, as far as what I'm concerned, I'm waiting for AI so that I can hire a cheaper version of myself so I can go fishing. But of course, this time it might be different. Thanks for watching. I'll see you in the next video.